What is a REIT? It's a real estate investment trust. Realty Income, one of the most popular REITs out there, is said to be like one of the best ones. And they have a history, actually a pretty good history of beating the stock market. Dividends, they have amazing dividends, over 90 quarters paid of that amazing dividend. So I think that REITs would be a very good investment, especially if you feel like there's going to be some uncertainty in the market, and there always is sometime or another. So when you're looking at REITs, if you're trying to pick the right REIT, you're looking at management, diversification, and earnings. So today we're going to be looking at store capital. I actually personally believe that this is a REIT that is actually better than realty income, which could potentially mean we can see better returns not only than the stock market, but also than realty income itself. And not only do I believe this, Warren Buffett himself believes this, as well as this company is undervalued. So for value investors, this also could be a great value play. It's trading at 42.6% below the estimate of its fair value, and the earnings are growing as well as the revenue. As you can see, it has a history of doing that, which is really amazing in any REIT, which that checks off the first list, earnings, and we can look at the management and diversification in a second. But first, I just want to ask you to subscribe and hit the like button. So we're looking at Store Capital. It's a really good company. Store, by the way, stands for single tenant operational real estate. So we're gonna be looking at Phil Town's rule for the four M's rule for our checklist. So we're gonna be looking at management, moat, and margin of safety, not meaning, because the meaning of REITs is just to provide the company with more cash flow, more earnings, more income to pay out its shareholders and to grow the business. I feel like that's what REITs mean. So as long as the REITs are producing income more and more and more, then there's nothing to even be worried about or thinking about. So when we're comparing realty income to real estate, realty income to store capital, I feel like there's no reason to look at that. So the management, is the entrepreneur able to articulate opportunity in 90 seconds or less? I think that is very important. Not only do I believe this, Kevin O'Leary from Shark Tank believes this as well. I was watching a YouTube video about what he was saying about successful management, what makes like when you're looking at investments, what makes a successful CEO, management, or what a potential successful company has to be like or has to do to be successful. And they said all of and Kevin O'Leary said that all of these sharks, whoever took a deal from one of the people who were presenting the product, the entrepreneur was able to articulate opportunity in 90 seconds or less. So I feel like this is very important. And that is why I was looking for this, seeing if he was able to ever articulate opportunity in less than 90 seconds. So the first thing I looked at, I was able to see it. In 43 seconds, he was able to articulate opportunity. This is at his own website that he put this. And that was the first thing I looked at, and I was able to see that he was able to. I didn't even go on YouTube and try to see interviews about him. Oh, that wasn't the first thing I did. I did do that, but that wasn't the first thing. And so the first thing I see, he's able to articulate it in 90 seconds or less. I will also have this link below in the description. Also, is this CEO successful in convincing investors that they were the right team to execute the business plan? At least he's successful in convincing me as well as Warren Buffett, because yes, Warren Buffett, Berkshire Hathaway, has been investing in this REIT more recently. So as you can see, he is very bullish on it as well. And as well as if you go and look at interviews with the CEO, you can see that he really understands the business to a high level, as well as you can see that he's very passionate in this business. Does he know the numbers, or he or she know the numbers and have a comprehensive understanding of their business model? This kind of goes in hand with the 4 point, which is, does the management have on average more than 10 years of experience at major successful related companies? And does the CEO have a strong ambition for whatever he or she is pursuing? And yes, this company does. You can see that they have 30-year successful leadership track record in this business. Not only that, he has been engaged in the net lease business since 1986. Between 1994 and 2014, he helped lead the public offerings of three successive companies that each became net lease leaders. Store was founded in 2011 to invest in single-tenant operational real estate, or profit centers, which is the inspiration for the name. Sorry, I don't know why I put that. I already told you about that. But yes, he has a very good track record of leading companies and becoming very successful. So that is a check mark right there. Also, the check mark for him having lots of experience. And he also does have a strong ambition for what he's doing, because he has been in it for a long time and he talks about it. When he talks about it, you can see that he lights up. which is really good. And also, if you believe in the principles of Rich Dad Poor Dad, a book I really extremely recommend, well, then you know that experience is more valuable. Well, the principle they teach a lot is experience more valuable than the money being paid, especially when you're first starting out. And this CEO has lots of years of experience. He's very old, in my personal opinion, and so he has lots of experience. That is not a bad thing, especially when it comes to businesses, especially even businesses like this. So, moat and margin of safety, does this company have that? Yes! The tenants are very diversified. Do they have steady growing income and or revenues? Yes. Do they have investment grade tenants? Yes. Do they have a history of growing income and revenues? Yes. Now we're going to be looking at some more sources to actually prove this in a second. But first, again, I just want to ask you to hit the like button if you found anything in this video useful so far. So, like I said, all the tenants are diversified, and we can prove this when we go to some other its investor presentation, which you can get by going to Store Capital's investor relations page, which you just type in Store Capital, and then you type in investors relations behind that, or IR, and you can find a lot of different things that you may need. If you want to look at their finances a little bit deeper, then you can go to the SEC, or you can go to, I don't know, Google, Yahoo Finance, or you can go to Google finance. So as you can see, they're very diversified. They have 511 tenants and 2,587 properties. If we divide that, divided by 511 tenants, we can get about how many properties per tenant, and that is about 5 properties per tenant. And then you see they're in 49 states and is diversified amongst 110 industries, meaning that if one industry gets hit really hard, for example, COVID, well, then possibly that industry will get really hard. They may lose a couple customers, and the free cash flow may be a little bit less, but then maybe another industry will be booming. And because they're diversified amongst a lot of different industries, it's really amazing. And remember, this is more than 110 industries, and it's in more than 49 states. So greater than 75% of the tenants, meaning 3/4 of the total tenants, is less than 1%. So that means if they lose one tenant, it's not really going to affect them nearly as much as maybe another REIT. So their top tenant is actually less than 3%. It's almost around there, like I think 2.7, 2.6%. So it really gives them really no risk. And you can see some other things. You can also see that they have just a lot of people. You can see that the tenants are growing and things like that. So I also want to show you how they're growing, because you want to know how they're growing, not just that they're growing. So they have repeat customers. About 1/3 of their new business is repeat customers. That means the other 2/3 are new customers. So you can see they also have 14 new net customers quarterly. And so every new quarter you can expect revenue or income to grow a pretty good bit, because they're having new customers quarterly, a good amount of them. Also, 70 net new properties quarterly, 32 transactions closed quarterly, and then it kind of repeats a lot of the other stuff. So they operate 36,000 locations in 50 states, employ 2.5 million workers. Weighted average tenant revenues, 838 million. Median tenant revenues, 53 million. 72% of customers have revenue over 50 million, meaning that there are people who are in their tenants actually are producing lots of revenue, which if they're a really good company like Store Capital is, they can turn that into a lot of income, meaning that they should be able to pay Store Capital. So I think that's a really bullish thing. Also, they're able to know all of these different things because they're very different from Realty Income. They collect a lot of data, which, as you know me, I'm very bullish on data and data-centered businesses, because it's just very valuable. And so, that is just very extremely valuable. There's no amount. It's not a commodity. There's no certain amount of data that you can collect. It's just always so much more new data, and the price is limitless. 72% of the customers have revenue over 50 million. They're able to collect all these different things just because they have so much data. And I like that, because we can kind of get a better understanding of the businesses that are paying them, so that we know they can continue to pay them, as well as it's just really valuable to have data. You never know how it can be valuable. It just really is. So you can see the top customer, 2.7%, like I said. That is a company called Fleet Farm. Fleet Farm is a full-service merchant with more than 45 locations in 4 Midwestern states, offering a broad assortment of goods from hunting gear to lawn and gardening and farm supplies. I think that is no problem, at least in the very near term, because this I know that is booming a lot. Anything with gardening and farming and hunting, things like that, that is booming a good bit. So I'm not really concerned at all with that being 3% in that company, especially because they are really just a really good company. And it's just gonna be booming. Now, what is concerning out of their top customers is AMC Theaters and Ashley Home Stores. But like you said, I'm not really concerned because I believe in the management a lot. Plus, they collect a lot of data on these people. So if they can't pay it, they'll understand. If these companies can't pay them in rent or something like that, well, then their store capital will be the first ones to know, and they can just delete them out of their customers or tenants. So, like I said, they're growing pretty good annually. Quarterly, it's sometimes really amazing, sometimes not. It's been kind of under 50 million for the whole year 2020. So yeah, let's see the next one. Right here, they have huge occupancy rates, 99%, almost 100% occupancy in all their locations. So that means people renting to them, they're continuing to pay rent, and almost all the renters are paying rent. I mean, all of the renters are paying rent. I'm sorry. I meant that the locations, things like that, well, they have just a little bit of occupancy, meaning that there's high demand for store capitals, places, and locations. Also, it provides a lot of value for stockholders. Their business approach and business model is really very valuable for stockholders. They have higher lease rates because of the business to business approach. They have lower real estate prices, longer lease terms, which is very important, meaning strong free cash flow, but for a good amount of time, or a lot of income, but for a long period of time. A lot of income for a long period of time. Smaller transaction sizes, greater investment diversity, stronger contracts, which is very important, and that provides a lot of value for the stockholders. I like their approach. I like their approach to everything. It's very innovative. It's very new, and that's a lot. I think a lot of billionaires say you always have to be continuing innovating, because if you're not innovating, if you're not making mistakes, then you will really never get somewhere. And I don't think that this is any mistake that they're making. I think this is actually innovation that is really amazing. It's not really an innovation, but the way they're approaching real estate investing is really innovative. So let's just put it that way. Also, as you can see, they have pretty strong dividend per share growth, higher than Realty income and a lot of other companies. The reason why a lot of people do not like this company or not invest in a company is because they're different, and people do not like different. Also, you can see that the 1 year target estimate is negative, like I said, but yeah, that's based on 13 analysts. As you see, just a lot of people aren't very bullish on it because they're different. Plus, they don't have as strong as a track record as Realty Income, which kind of makes a lot of people a little bit more scared. But if you take the time and research, there's no reason to be. And Warren Buffett investing in this company makes me even more bullish on it. As you can see, Warren Buffett has been investing in this company. He seems to be very bullish on this company, and but he has been investing in a lot of different companies lately. So we can go to another thing, their website. Like I said, I'll have this link below. I would have played it, but like I said, 43 seconds. Like, this management team is extremely amazing. Like I said, you're getting all of this at a very good discount. It's undervalued, and compared to the other peer, Realty Income, that is really good that this company's undervalued, because the other company, Realty Income, is, I don't think it's undervalued, but if it is, it's not nearly as much, especially because the market sentiment is way higher. As well as, this company has a YouTube channel if you want to check it out. So yeah, that's all I have for you today. Make sure to subscribe if you haven't already. If you found this useful in any way, please consider subscribing, and goodbye.